Good morning, everyone. Today we are going to tackle government grants and disclosures required. This is a short topic that you would encounter in intermediate accounting. First, what is a government grant? Government grant is a financial award given by the federal, state, or local government to fund some type of beneficial project. Government grants aren't just bestowed, they have to be applied for. Getting a government grant is an extremely competitive process because the grantee is not expected to repay the money. The paperwork is complex and applicants must describe how the awarded funds will benefit the local community or the public at large. It is also known as subsidy, subvention, or premium. Recognition and measurement. Government grant is recorded at fair value if it is assured that A. The entity will comply with the conditions attached to the grant, and B. The grant will be received. Classifications of government grant. There are two types of government grant. It is a grant related to asset if the condition attached to the grant is to purchase, construct, or acquire a long-term asset. The other one is grant related to income, which is any grant other than grant related to asset. Accounting for government grant. According to the International Accounting Standards, government grants shall be recognized as income on a systematic basis over the periods in which an entity recognizes as expense the related cost for which the grant is intended to compensate. So, for better understanding, let us tackle some examples. The first example is a grant in recognition of specific expenses shall be recognized as income over the period of the related expense. Example, a grant to defray the expenses for a safety and environmental related project which will run for 3 years and will be expensed as follows. So, I used a relatively small amount so that we could compute easily. For the year 1, 500, year 2, 300, year 3, 200 with a total of 1,000. This is the budget for expenses of the entity that would conduct the project. So, for example, the government is advocating safety and environmental concern. They will provide the entity a grant of 300, which will be recognized over 3 years in proportion to the cost incurred. For the entries related to number 1 for the first year, the first entry would be to recognize the receipt of the grant. We debit cash for 300 pesos and credit deferred grant income for 300 pesos. So why did we use the title deferred grant income? Deferred income refers to advance payments received for products or services to be delivered or performed in the future. In this case, we already received the grant even though we haven't incurred any cost for the project, therefore we record it as deferred grant income. Next is the recognition of expense incurred for the project. We debit environmental expense since this is about safety and environment project, and credit cash for 500, which is the cost incurred for the first year. Next is we recognize the grant income for that year. So how would you know the portion of the 300 that should be allocated for the year? The total grant income is 300, and the total cost of the project is 1,000. The expense for the year is 500, so we will divide it to the total cost, which is 1,000, to get this year's portion, then multiply it to 300. Since we already incurred cost for the project, we can now recognize the partial income. So we debit deferred grant income for 150 and credit grant income for 150. The second example is a grant related to depreciable asset shall be recognized as income over the periods and in proportion to the depreciation of the related asset. Example, Purchase of a building with a useful life of 10 years for 1,000. The grant of 500 is allocated as income for 10 years depending on the method of depreciation. So in this example, the entity is given a 500 pesos grant for a building that it purchased. Let's assume that we used a straight line method for depreciation. The entries related to number 2 for the first year. So again, we have to recognize the receipt of the grant. So we debit cash and credit deferred grant income for 500. Next is the purchase of the depreciable asset. We debit building for 1,000 and credit cash for 1,000. Since this is a depreciable asset, we recognize income in proportion to the depreciation of the asset. So first we compute for the depreciation that is recognized yearly. We divide the cost of 1,000 over its useful life of 10 years. So we debit depreciation for 100 and credit accumulated depreciation for the same amount. Then we recognize the grant income for the year by dividing the grant of 500 to 10, which is the useful life of the depreciable asset. So debit deferred grant income for 50 and credit grant income for 50. The third example would be for a grant related to non-depreciable asset requiring fulfillment of certain conditions. It shall be recognized as income over the periods which bear the cost of meeting the conditions. Example, a tract of land with fair value of 400 with the condition of putting up a refinery with estimated value of 1,000 with a 10-year life. So in this example, we are given a land in exchange of putting up a refinery. So for its entries, first we recognize the grant. We debit land for 400 and credit deferred grant income for 400. So we used land for the account title since it is what we got from the government. Next is we have to satisfy the condition. We purchase and debit refinery for its cost of 1,000 and credit cash for 1,000. Then we recognize the depreciation for the year. 1,000 divided by 10 is 100, so we debit depreciation and credit accumulated depreciation of 100. Lastly, we recognize the portion of the grant in proportion to the depreciation of the asset. We divide 400 over 10, which gives us 40. Again, debit deferred grant income of 40 and credit grant income for 40. The fourth and last example is a grant that becomes receivable as compensation for expenses or losses already incurred or for the purpose of giving immediate financial support to the entity with no further related cost shall be recognized as income for the period in which it becomes receivable. So this problem is an after the fact event. For example, there's a natural calamity that happened. The grant will be given to reduce the expenses of the company. There is no more condition attached to the grant because the project or condition has already been fulfilled. In which case, we already recognize the grant income because the cost has already been incurred. So we debit cash for the amount of the grant and credit grant income. These closures required about government grant. So the first is presentation method adopted by the entity for the government grants in the financial statements. The nature of government grants recognized in the financial statements. Other forms of the government assistance received by the entity from which entity has obtained benefits And lastly, any unfulfilled conditions related to the grant which has been recognized. Thank you for listening, and I hope you learned something.